Hi there. If there is a medal for resilience at the Paris Olympics, I think the Indian stock markets may rightly claim the gold in this category. Just look at what the markets have taken on in just the past, say, 2 weeks. A budget which raised capital gains taxes on stocks and on other investments like real estate. A monetary policy that was a little more hawkish than the market expected. And a global rout that up until Wednesday had taken away over trillions of dollars in market cap. And yet today, where is the Nifty standing? It's only 2.72% off its peak and is still nearly 25% higher year on year. How do we chart this market here on and pick winners from what looks like an expensive market? I have with me a market master who has a record of spotting trends ahead of the curve. Think PSUs, think defense stocks. I have with me Sridhar Sivaram, the investment director at Enam Holdings.
Thank you, Lata, for inviting me.
Well, Sridhar, first up is the market. I mean, it's very nice to say the Nifty is up 25%, but that also is a bit of a fear. Do you think we should worry too much about valuations now?
No, we should. I think on a broad basis, we think that we could either see a correction or we could see a sort of a time correction, which is the market stays in a range for a while, absorbs the earnings, absorbs the, a lot of the negative news that we are getting globally. Yeah. We could see interest rates hike in the US, which was earlier seeming like a very benign thing. Now it could be even 100, 150 basis points just in the next 6 months. Yeah. So I think those are the things the market has to absorb. So we are a bit cautious at this stage. There are pockets where we like stocks, so it's more stock-specific, bottom-up. But on a top-down basis, we are a bit more cautious right now.
Okay. So you think the global shudder that we got is not done?
My personal view is it's not done. These are too complex, monsters to actually analyze. I mean, think about yen as a currency. It's corrected 10%, and then from there it has gone up again by about maybe 1 or 2%. The markets, the Japanese market is down 25%. Nasdaq has seen a 10% correction. So we've had multiple, activities in the last, say, I would say 10 days. Exactly. And within that, I guess, as you said, India has been very resilient, 1 or 2% correction on a net basis. Currency, I think India has been one of the most stable currency. Look at, Korea, Taiwan, Indonesia, and I'm leaving aside the Latin American currency, which have literally collapsed. All these are down 5-6%. Our currency is barely down 1%. So I think we've been very stable. Our macro looks reasonably stable. I mean, you look at the commentary yesterday and the macro looks very stable. So I don't think the worry is more from India. The worry is what is happening globally, and we haven't even spoken about geopolitical events, which are, all over.
Oh, yes.
So I think that is the worry more than what is happening in India.
Yeah, geopolitical worry. Let's not forget, November can mean a Republican victory also.
Exactly.
And then, things can turn. But yeah, we still have to pick from the current basket. Let's look at the earnings season. What did you take away, say, from the financials? That, I guess, was the mediocre show.
Yeah, so I think we were expecting that credit cost will normalize. Most of the large banks had very low credit cost. Some of the PSU banks had 15-20 basis points of credit cost. Large private banks were in the 50 basis points range. And our expectation for the current year is that credit cost will go up in some cases by 50-60 basis points. In most cases, on an average, at least by 25-30 basis points. So that itself puts a pressure on the net earnings that they will report. On top of that, we are seeing the crunch on deposit, which basically means that you're paying more for deposits and you're not able to increase the loan rates for various other reasons because of competition. And plus, Reserve Bank is, pounding on top, saying, look at the risks.
Loans yesterday, Khara was on the channel after the policy. He said, many of my loans, corporate loans, are tied to T-bills. So I can't raise that. Yeah. But deposits are expensive.
So we think that earnings for this year for financials will be muted at best 8-10% growth. But having said that, a lot of it is priced in and the valuations look attractive in a market where we are finding difficult to find, value. we think that we could ride, 1 or 2 quarters of underperformance, but this looks a space which is reasonable if I take, say, a year or a 18 months view.
Yeah, in the long run,
Yes.
This is
Yeah.
still a safe sector, a good sector. Okay, let's come to Ola. Ola's listing. How do you look at the as a concept stock almost the only?
So I'll
solely
not
EV?
talk on individual stocks, but on EVs in general, I think it's too early to make a prediction or to give a verdict on who will be the winner or who will be the loser. But if I look at disruptions across the globe and across other sectors, it's generally been that non-incumbent has always been a winner when there is a disruption.
Okay.
So you can go back to the cameras, you can go back to what happened to messaging, WhatsApp.
Phones.
I mean, there are exactly. I mean, you can go back in history and check that disruptions are the winners are normally non-incumbent.
Outside.
We are seeing that with, say, a Tesla in the US. So I would, if I was
So
a
would you
betting
worry
man,
about autos generally? Are you an investor?
I would be worried because the traditional auto companies are the ones who are getting disrupted, but they are fighting a battle where they also want to be in the EV space, and that's not a profitable venture for them. It's a Me Too product for them, and we are seeing across the globe that companies, especially in the auto space, are cutting back because they're facing a lot of loss, and the adoption at the high price is becoming lesser. So I think this is a moving story. At this stage, it's too early, and we don't need to participate in every disruption at the early stage.
Exactly.
So we are watching from the sideline.
Okay. Well, you were famous in CNBC studios, definitely, and definitely among our viewers for spotting the PSU curve ahead of times and for getting out of many of them also ahead of the crowd. Now, how do you look at the PSU space? Is there still anything to pick up?
So we still like a few of the PSU banks where we think that the credit cost normalization is still happening. Many of them have already normalized, so for them it will go up. There are a few where the credit cost is still coming down. As I said, on the operating level, I don't see banks growing more than 8-10%. But as credit costs normalize, you get a significant bump up in the profits.
Yeah. So
and a
PSU
few
banks.
more here and there in the utility space.
That's what I was coming to.
Yeah,
Power.
Exactly. So power is the space that we are in general bullish. I think India is underinvested in power. We will, double our power capacity in thermal and in wind in the next 2-3 years. We will be adding, say, 70-80 gigawatts in the thermal space over the next 4-5 years. So we are very bullish on the power equipment space. The entire eco chain will do well. And
yeah, that's what you don't talk stocks, unfortunately, but if you can guide us, see, there are power financiers, there are the REC, PFC variety. There is the power generators, the Tata Power, Jindal variety. And then there is the equipment guys. Where would you
I think the entire ecosystem will do well, right from the utility. Obviously, their returns are controlled. But you have open access, so there are percentage of the power that you actually don't sell in the controlled market. You are selling in the open access market where you can get 6-7 rupees or 8 rupees, whatever is the demand, and the demand is very high today. Then you have the REC PFCs of the world or the power financiers of the world. Their demand is going up also, so they also would do well. I'm not suggesting that they are a buy. I'm just
saying that they do well in the.
Do well. And the equipment guys, they are in the best sweet spot right now. So if you see margins for almost all the companies are going up 100-200 basis points because they also haven't created capacity because there was a lull in the last 4-5 years, and suddenly you're seeing huge order books. They're setting up capacity. The demand is very good. So I think it's for individuals to figure out, which part of the value chain they want to play. A lot of the stocks have rallied, but the earnings are also growing at 30-40%. So it is a space worth keeping a watch, especially you get corrections every now and then. And that's the time
equipment guys get paid by the power generators because the power generators are disciplined stocks, but the power generators don't get paid by the discoms because their buyers are not very disciplined.
A lot of the power addition is also happening in the private sector, which is even corporates are setting up smaller power plants for their usage, internal usage. So I think there's a multiple play here. You can also play the solar, wind. There are multiple plays available here. I leave that to individuals to figure out what they want.
That is something as a theme.
It's a space that you know that it is going to grow. We've underinvested. And keep in mind that globally people are underinvested. With AI, with data center, the power requirement goes up multifold.
Yes.
So I think we haven't even spoken about that. A lot of data centers are relocating in India. You spoke about EV. EV needs a lot of power if you want to charge. Even a manufacturing of EV, which is the battery itself, to charge that itself, you need a lot of power. So I think this is a moving story where the demand for power is going to be there, not only in India, globally. And the options to play are multiple, but a lot of them have moved up. So I think it's worth, keeping an eye on them on corrections.
One of your ahead of the curve themes was also EMS,
Yes.
The electronic manufacturing companies. Are you still, what is there, Dixon, Keynes, Myrna, Amber?
So it has become a very stock specific story there because as the sector is evolving, you're seeing the margins are very thin here. So unless you're very efficient,
Yes.
You would take a hit. We're still bullish on an overall space, but it has become a very stock specific story. But over the next, if you take a 5-year story, I think all of them will do well as they evolve, because you need electronics in almost every space that we touch today, and you need the manufacturing of that. And with all the PLI benefits that the government is giving, they're all investing in this space. So eventually they'll all do well. There was a period where they had gone ahead of their time in terms of earnings to where the stocks were. A lot of that is correcting now. So it's worth looking at it again.
Okay. The other theme that was extremely popular 2 years ago, when they listed Nykaa, Zomato, PB Fintech, the entire e-commerce space, irrespective of the field. And then they had this huge downturn, which was led by Paytm. But everybody saw that now has that space become attractive again? Zomato again is expensive. But
So it has become, in fact, a year back itself, when we spoke, I had highlighted that we didn't participate in any of those IPOs in 21 because we found that there was no path to profitability, and then eventually these stocks corrected, and the management also started to talk about profitability. That's something which we understand. It's very difficult to take a call on stocks just based on the sales number. So it's far easier now to take a call. So we are invested in a few of them, and we like, but it's very stock specific. Each of them have their own dynamics. It's not a generic portfolio where you can say, oh, all this will do well. So we are invested in a few of them.
Okay, I always make the mistake of suggesting themes. You tell me what have we not discussed and what you would think stands out for you.
No, I think the only other thing that I can say is that the fact that Reserve Bank has been highlighting about this NPAs in the unsecured, and I've been very vocal about MFI as a business where we are seeing a lot of...
Yes, we saw the fusion results.
Exactly, a lot of NPAs coming there. And, in the quest to grow the loans faster, we are seeing many banks not adhering to, credit standards. I was surprised to see in one of the conference calls, the management mentioned that there are individuals who have 3 to 5 loans, 6 loans, and somebody from the market told me there are people who have 10 or 15 loans also from banks. I wonder how banks are giving so many loans to an individual. But I think the fact that yesterday Reserve Bank governor also sounded out some caution, especially on top of loans.
Actually, they have told banks now they have to report to the CIBIL every 15 days.
Yeah, so I think
hopefully they will catch the guys who are taking money.
Those are steps in the right direction. Some caution is warranted. You make most of your mistakes in good times.
Yes.
So I guess this is the time to be cautious.
No, actually, there's never enough time to discuss with you. We haven't still discussed the capex cycle, cement stocks, but we have to postpone that for another day.
Sure.
Sridhar, Sivaram, pleasure. Thank you very much for
Thanks for
dropping by
inviting me, Lata.
Studio. Okay, that's still a lot of caution, but stock-specific picks are still available if you do your homework. Wrap up on Bazaar on that cautious optimism. Chartbusters coming up.